PG Electroplast is the company that I'm looking at this morning. Q2 is a strong quarter for them actually. Healthy revenue growth, gross margin expansion of 240 basis points, and the company has turned net cash positive after the QIP. Vikas Gupta, who's the MD operations at PG Electroplast, joins us now to talk about that. Vikas, thanks a lot for joining in. You know, this whole room AC business has really grown well for you. In fact, in the first half, you saw 50% growth in the room ACs. Can you tell us what is a sustainable growth rate overall for you, and segment-wise as well? Where are you seeing maximum amount of growth?
Yeah, good morning, Sonia. So, RAC business has been a kind of a growth driver for our company, and we expect to maintain the same momentum. Last year, for us, the RAC contributed almost around 1,100 crores to our revenue. And we expect that that number to be around 1,400 to 1,500 crores this year in FY24. And other product categories also, like in washing machines and in molding business also, we are seeing a decent growth.
Okay, so you said that 1,100 crores was the room AC business in FY23. In FY24, it can go to 1,500 crores, which is almost a 36% growth. Is that something that you can sustain in FY25 as well? And overall, you had given a guidance of 30% growth for the top line. Do you hold on to that, or would you want to build on to that number?
So, for the revenue guidance, we'll hold on to that value of around 2,800 crores for FY24. Looking at the growth momentum for FY25, please understand we have already invested in a greenfield plant for AC manufacturing in North India. And that should be up and running by January of 2024. That should start contributing some amount in this FY24, but largely it will contribute in FY25 numbers. So we are hoping to maintain the similar level of momentum in FY25 as well.
All right. Hi, Mr. Gupta. Good morning, and thanks so much for joining in. So half of your money will be coming from the RAC business, but the TV business as well, the TV sets business, there you've been ramping up big time. You also have that JV with the China, group. So tell us, what kind of revenues are you expected to do in FY24? And from this JV, what kind of a contribution will come in towards the end of FY24 and then ramping up in FY25?
So good morning, Nigel. So basically, for FY24, our TV or electronics business should contribute almost around 250 to 300 crores. And for FY24, we don't see any major numbers to be contributed by the JV company. But FY25, definitely, JV company should give a number of around 500 to 700 crores in our TV business.
Okay, 500 to 700 crores in the TV business. Got it. Can you tell us the capex for FY24 will be about 180 crores, right? You don't plan to spend more than that. And any plans on what the capex would be for FY25?
So recently, we are looking at certain other product categories to enter into those. So once we are able to finalize that, we will share that. And based on that only, we'll be freezing our capex plan for FY25. So we should be able to come out with the numbers in coming few months.
So that's for the other products, but I'm talking for the room AC segment. You said the room AC business, can give you 1,500 crores of revenues next year. Are you putting fresh capex on board in order to increase your capacity there?
So the capex that we did, Sonia, this year in 180 crores, almost 70, 80 crores has went into RAC business only. So that will also start contributing to FY25 numbers. As of now, we are not envisaging very large amount of capex in AC business, but definitely it will be in the range of 40 to 50 crores going forward. Definitely in FY25.
Okay, got it. Just to reconfirm, TV business this year will do around 250 crores, and the following year, including contribution coming in from the JV, will go up to 500 crores. Are we getting that correct?
So the TV business will be moved into a JV company, so that JV company should be doing around 700 crores.
Okay, 500 to 700 crores is what you mentioned. What about the washing machine business? You know, you sold 4.6 lakh units in the past year. That's FY23, I think. For this year, in terms of number of units, and for next year, what are you looking at?
So for the current financial year, we are targeting that we should be able to achieve a growth of around 25 to 30%. And I think we are online with that. For FY25, still we are not finalized our business plan. I think by the month of March or April, we should be able to come out with the numbers for all the product categories.
Okay, you confirm 2,800 of revenues, but margins will be in this vicinity of around 7.5%. Any upside or downside risk?
So we like to maintain a guidance of 7.5%, but we are seeing some positive movement in that. We'll keep our fingers crossed on that.
Okay, all right. Thanks a lot for joining in. Appreciate your time here on CNBC TV18. Well, Dipan Mehta is still listening in. Dipan, any quick comment on that?
No, I think it's a great business, and all these original equipment suppliers like PG Electroplast, and you could add Amber to it, and Dixon, they've really created a lot of value for investors. It's just that at 60 times plus for a typical B2B business, it doesn't really seem that exciting at this point of time. But I think if you're holding shares of PG Plus, then it should remain invested.
All right, remain invested if you're holding on to PG Plus. Very good business. Let's slip into a quick break on the